This is my first live, so I'm not sure what to expect. Thought I'd take it outside, enjoy the nice weather we're enjoying here, and talk about COVID-19, since that's the issue on everyone's mind at the moment. I've been doing a lot of talks online, sort of seminars and conferences and things like that. And of the various talks that I have given, it's been the one question that's coming up a huge amount. But there's a lot of uncertainty out there about what's going to happen, and in particular, there's a lot of, I suppose, disagreement between different parties as to what exactly is going to happen with the economy, and then what are the opportunities and how do you take advantage of it. But also there's a few people I think that are in a certain amount of denial, thinking that there's going to be a quick bounce back. So I thought I would talk about some of this today and give you just my view and the views that I've been kind of giving at the various talks that I've given. And in addition to that, some of the feedback I've heard from other people as well. Some people that I've spoken to have been quite pretty much in agreement with me on most of the issues, but there's been a few people who've pushed back, and those guys, they have a different business model to me, so perhaps it's something that they need to happen in order to sort of stay in business. But anyway, getting into the economic crash, I think this is unprecedented in its scope. We've got bars, restaurants, hotels, airlines, just you name it, and it's all been closed, and people have been either furloughed or they have been put on, basically lost their jobs. And so if you just take one industry as an example, the travel industry, that covers airlines, cruise ships, railways, hotels, food and beverage outlets and stuff like that, and then clubs, tour operators. And then you've got the people who actually, so they alone employ thousands of people. But then in addition to that, you've got all of the suppliers who work for them. You've got the people who provide, the food and things like that. You've got the people who provide the cleaning services, the products for cleaning. You've got the software. You've got, just across the board, if you just think deeply about all of the various areas that each business is involved, you start to notice that this is really a massive, massive impact across the board. So it's going to have a massive domino effect. And I mean, initially you're thinking, okay, someone lost their job, so that means that they can't pay the rent. They can't pay the rent, then you can't pay your mortgage. If you can't pay your mortgage, then what happens to the bank? The bank starts to expect delinquent loans, and they start to pull back their confidence and things like that. So the deposits that people have been saving up to buy their first home or whatever, those things may be what these people are surviving on now. The income support that's been given by the governments, it's great that they've stepped in like that, but there's a lot of people that would earn more than the level of income support normally. I think it's based on an average salary of 30,000. So if you're earning more than 30,000, your lifestyle will have adjusted to that. And so the fact that you're getting looked after to the tune of 30,000 may leave you well short. And so if you have any kind of a deposit saved for a home, could well be that that's what you're dipping into. So that's going to happen. And just across the board, you're going to have a massive amount of confidence shaken, and consumers will just stop buying. They'll delay purchases. They'll decide to go another year without a change of a car. All of that, just across the board. So to think that anything other than a deep, deep recession is going to follow this is, I think, deluding yourself. Now, it may not be as long as the 2008 recession. When I went through the 2008 recession, it was absolutely brutal. Land prices fell by 80% in parts of Ireland. Some of our portfolio dropped by 60%. And so we suffered like dreadful results. And the problem is it didn't bounce back quickly. It took years for the thing to bloody return. So when you're into that kind of situation, there's a point where it drags on so long that capitulation takes place. I'll talk about that in a little bit longer. Also, we're talking about the amount of businesses that have been closed, like restaurants and stuff, shops. Those businesses are actually facing huge struggles just to reopen, because the cost of reopening, you reopen the business, you haven't had income for how many weeks now, and you still have got, loan payments, you might be leasing equipment, you might be doing all of these items, and that is all still there. Those debts are still there that need to be paid, but you've been missing how many weeks of income to actually service that. So what you've really just done is in a sense, you've just extended your loan by another, say, 2 months or 3 months. But there are people who just do not recover from that. You can't extend your rent unless you have a very forgiving landlord. But most landlords are on rent, need the rent to service a mortgage. Or if you've got a mortgage there, how are you going to pay that? Are the bank going to forgive you? So it's that domino effect that just across the board. A lot of businesses just won't be reopening. So anyone in commercial real estate is also looking at a bit of a bloodbath. And the retail sector in particular, they were already suffering, but a lot of people are not going to be coming back now. And I've been talking to some of the tenants that I work with in the retail space, and one in particular was coming up on a break clause that they had, and they were thinking that they were just going to use it to walk away from their lease, and they had spent quite a bit on a fit out, so it will be interesting to see whether they trigger that or not. So who's going to pay for this? You've got the banks, and are they going to forgive all these loans? I doubt it. They've never been that way inclined before. The government is stepping in to support with these Covid-19 payments, and it's stepping in to support banks, and it's putting liquidity into the market. But who pays for all of this? Ultimately, the taxpayer does, and so we're looking at tax increases across the board in the next couple of years, and how that's going to be all funded, I don't know. But if you think, and also just look at the PPE. I was looking at the numbers. Normally here in Ireland, I think they spend something like 13 or something like 8 million a year on PPE, and this year it's 108 million or something like that. So it's like a 10x multiple or even more on what would normally be spent in a year. So all of this is going to have to be funded somehow. So it puts a huge amount of uncertainty on the future. And also, is there going to be a second wave? Who knows? I mean, you could have a situation where there is a second wave and a second lockdown. If that happens, God help us all, because it's going to be terrible. But I do see a certain amount of, people are just starting to become a little bit relaxed. I noticed that outside in the evening, a lot of the kids are running around playing together now, whereas before they were all being kept in social distancing and stuff. So it seems that parents are starting to kind of relax a little bit. I notice a lot more cars on the road, and I'm noticing a lot more people out walking and running and things like that. So I do think that there is a risk of this thing starting again and there being a second wave, but we'll see. Fingers crossed that doesn't happen. So let's get into some of the specifics around real estate. I've basically broken people down into two different buckets. You're either in scenario one, you have been very active and you have multiple projects underway, or scenario two, you're sitting back and you're waiting for an opportunity. You're in a good position. You've got cash. For those in group one, let's deal with you guys first. You guys are obviously feeling the pinch and you're under a little bit of trouble. You've got a situation where you've got to get first of all, your emotion and your mindset under control. You need a level head. First of all, if you haven't already, you got to cut back on your overhead and your expenses in a big way. This is survival mode. And a lot of time, it's fine to go and cut back various unnecessaries and things like that, but have you dug deep into your own personal lifestyle? That was something that I noticed before. I really did not cut back on my own lifestyle. It's a difficult thing to cut back on, and suddenly, everyone is kind of feeling it. But that is something that if you've grown accustomed to a certain lifestyle, you really need to turn that back and delay any kind of unnecessary expenditure. And if you have staffing, things like that, you really need to think about that. Obviously, you need to keep certain core staff, but is there any extra people that were kind of unnecessary in the kind of survival mode. You also have to perform triage in your in terms of your the 3 Ps, I call them. You've got your projects, you've got your portfolio, and you've got your pipeline. And obviously with projects, it's currently projects that are underway, and you got to go and assess how far you are from completion. You got to assess how much cash it's going to take to get to completion. You obviously can't sell a project or launch a project or do anything with a project while it's half built, half under construction. So you need to stop that. You need to kind of get that rectified. You need to stop the bleed as fast as possible. And so how can you do that? Can it work? Can that project work with the new situation? If you're looking at reduced sales, have you adjusted your sales? I mean, you have to start looking at that. We've started looking at the various costs of sales for a number of our projects, and nobody likes to do it, but start marking down your assumed sale cost by 10%. What does that look like? How does the figures at the end of the day come out? You might find that your project has just slipped into a loss. It may not be a loss, but you might not have a profit any longer. You may be reluctant to actually press the button on that and make those assumptions, and I can totally get it. But the sooner this is what I mean by mindset, the sooner you accept that you're living in a different time, there is no point having this fantasy price that you originally thought you were going to make this money. At this moment in time, you should be thinking about how do you avoid getting into a situation where you're in negative a negative net worth, which is very possible and something I've experienced. I ended up multiple millions in the negative back in 2010 after the 2008 crash. Going into the drop in demand, I mean, there's going to be this reduction. If you're building houses, there's going to be a reduction. If you're renting houses, there's going to be a reduction in demand, and you just need to kind of factor that into your whole situation. And you have to think about getting ahead of the market. Nobody likes to take a price cut, but if you are resistant to that, this is the point I mentioned earlier about capitulation. If you are reluctant to drop your prices and you're holding firm for the price that you always had in mind, what happens is the market around you, other people start to drop, and they start to collect sales because of that. And you might be thinking, oh, he sold at a loss, he's a fool. But you could find that that's the new market low, and that you are now very expensive looking compared to it, and therefore you've got to eventually cut down to not just down to that price, but to get to below that price in order to sell your product. And it's a very painful thing to do, but chasing down a market is something that I've done before, and you almost always end up selling for far, far more than you originally thought that you would have to mark down to. So if you're reluctant to mark it down, you should actually be thinking about marking it down to even more than you're reluctant to mark it down by. I see Ben has just joined us. Thanks for joining, Ben. Talking about performing triage in the pipeline, your projects, your portfolio, or your pipeline. And then we're going into your portfolio. You've got to review your assets for weaknesses. Are all of your rents up to date? Are people starting to ask for rent, delayed payments of rent? This actually happens across the board. It's not exclusive to smaller residential projects. We have got 2 multinational tenants in our business park that have approached us looking for delayed payments. Now, what that often is that is often CEOs trying their best to make a good of a situation. And there's an old saying, never waste a good catastrophe. And these guys have come to us, said, it's very dangerous at the moment, it's very bad, we're looking at job cuts and all this kind of stuff. Can you allow us to defer this quarter's rent until next year? And we sort of say, well, let's have a look. So you really got to dig deep into these guys' numbers, and you've got to fact check them, because sometimes this is a bit of a try on. It's slightly easier with a residential tenant, because the tenant is going to say, look, I've lost my job. Clearly that guy is not going to be able to pay, and so I'm not going to give a guy like that a hard time. But when you've got commercial properties and you've got guys coming and saying that you're making job cuts or something like that, you got to get into the numbers. You got to get into the detail with them. Don't just cave in and say, okay, yeah, we'll work with you. Because what we found in the most recent cases, we found that 2 of the tenants came to us, multinationals, talking, crying about the economy and so on. And what happened with them was we found out that one of them was currently paying dividends. The group, the main group that all the that's listed on the stock exchange, was paying dividends to its shareholders. So you can afford to pay dividends. You do not need any kind of a holiday on your rent, that's for sure. And then the other group that we were talking to that came along and asked us about this, we managed to find their Q1 financial report, which also had guidance for Q2. So this is something that they had just published at the 31st of March. And on the 31st of March, they said, oh, don't, because they're talking to investors, of course, they don't want it to sound so bad. So they said, oh, we made 108 million in the first quarter. So things are looking pretty good. We have taken an impairment on revenues and blah, blah, blah. And then they were projecting that quarter 2, there would be a drop, but it would still be profitable. And they were estimating that the end of the year would be coming out in the 380 million or something. I mean, a company like that looking for a holiday on rent, come on. This is where the CEOs are basically trying to ensure that they don't waste a good crisis. Getting into assessing, so you assess your assets. Now, if you've got to a situation where you're over leveraged, and a lot of people will be in that situation, I imagine, because of the fact that this thing has come out of nowhere. It's hit us so quickly that a lot of people did not see the writing on the walls. Now, we were in a fortunate position insofar as we actually sold an asset last year, and we kind of thought to ourselves, with Brexit and with Donald Trump, saber rattling with China and things, we just thought that there was a potential risk of some sort of a downturn or a recession. So we didn't actually buy anything. We thought it was good to be in a cash situation. Because of that, we're actually in good position. But a lot of people will be sitting on debts that they've just taken out, deals that they've done, expecting the economy to keep on firing on all cylinders. So you need to now start to review that. And is there anything that you can shed from your portfolio? You are probably going to need to get ahead of the banks starting to review your position in 3 months' time and saying something like, look, your debt is too high, we're going to have to see some sort of haircut. Anything like that, it's best that you're leading that conversation. Don't be somebody who's reluctant to do it and then find that the bank are pulling the plug on you. You need to have done a full review of your portfolio and try to assess whether or not there are assets that you believe you can shed early. Put them on the market. If they're not core assets that you feel like have some sort of a long-term future in your portfolio, maybe you were thinking of trading them, whatever your reasons might be, but we've sold off stuff that we didn't consider to be core. And because if it's not core, then what's the point in it sitting there? You need to free up cash. You need to get your debts down to a more manageable level. And you should do it before you end up in a case where you're going to have to start selling into a loss-making market. Also, if you can free up cash now, you might be in a better position to take advantage of distressed prices further down the road. I do believe there will be a point in the not too distant future where there will be distressed sales. What else have I got to say? Yeah, your loan to value ratio, you need to be assessing that stuff because the banks are certainly going to be reviewing it at some point. Now, this has all happened so quickly. The banks are not looking at you in particular. They're looking across the board at entire portfolios of their loans. So you probably have a couple of months to do this, but I do think it's best that you are the one who's done the full assessment and you're ready to go when they call you in to have this conversation. Don't be caught out or be caught surprised by them. They also, if you're in any kind of a situation where it's quite difficult, they might implement a situation. What's that, Ben? Asset classes. Yeah, asset classes with opportunity next. I think definitely the whole warehousing sector has got to be something that is going to shoot up. In my view, you've got every single retail business in the country, in the world, has finally realized that if you're not in a digital situation, you are out of business. And so everyone is going to be going to a certain situation where my own sister has got a small online retail business, and she says she's never been so busy in her life, and she has a small storage unit and it's absolutely chock-a-block, and she's there saying, why didn't I get a larger one? Nobody thought that this situation would ever take place. Therefore, I think there's going to be huge demand for small warehouse units that people will want to position themselves. Also larger stuff as well, because the supply chain, as we've seen this happen with PPE and all of this kind of stuff, you can see governments fighting with each other. I can see that deliveries that were due to go to Spain were hijacked and went off to America and stuff for PPE. So I think national governments are going to start to look to stockpile all of this kind of stuff so that it cannot happen again. And in addition to that, you're going to have people looking at, instead of this global supply chain, they're going to start to look to bringing it back to a local supply chain, at least as a fallback situation, where you have, this massive, these car companies that are working on, as it's required kind of parts and stuff. And the whole supply chain has been completely screwed up. All of these companies are now going to start reviewing, I think, that just in time, a scenario that they've been working to for the last number of years. And I think that is going to need huge amount of warehouse space. So that would be my big point. I also think possibly regional office, because of this huge work from home experiment that we've all done. I do think that there may be a review by a lot of major occupiers about things like work from home worked. We don't need to have the huge city centre property that's costing us £65 a foot or euro a foot or whatever. We can go and take some regional stuff at a quarter of that price. People can work from home. They can come in a couple of days a week for certain meetings and for kind of collaborative work. And I also think the flex office thing, leaving aside the concerns that there's going to be around social distancing and all that, I do think this whole work from home experiment is something that is actually going to start to come into the conversation. And I've looked at a couple of big banks that I work with, and those guys have been moving from instead of, in the past, traditionally they would have had 100 desks per 100 staff. They've been moving towards 80 desks per 100 staff, primarily because if you do an audit of your staffing, you will find that you've got 100 staff don't always come to work. You've got to have guys on holidays, you're going to have guys on time off, you're going to have guys on holiday, and you're going to have guys that are out at meetings and stuff. So at any one time during a day, there would probably be only 70 people sitting at their desks compared to the 100 that actually the desks are there for. So a lot of them have moved towards just renting on a fixed basis 80 desks and then introducing a certain amount of hot desking. Now, I've actually seen that people looking at that even more aggressively, and they've started to reduce that down to 60 desks, fixed long-term leases, and then going to a 20-desk flexible option, so that people, if they don't have a desk, they can go off to a WeWork or whatever. Do I see hospitality coming back in the time period? That's a big question. Frankly, I don't know. I think hotels. I think the whole industry, you might have a certain amount of local travel, staycations, but I don't think anyone's going to be rushing to get back on an airplane. I don't even know how the airplanes are going to survive if social distancing is required. So if you're not able to get on a flight and fly to your holiday in Spain or whatever, if you've got people in France and Europe saying, let's go to England, and all being reluctant about getting on airlines, then I can't see the hotel industry bouncing back too quickly. The enhanced cleaning, all of that's going to obviously add costs. And then, well, I think it's probably going to be more the like of the demand, the fact that people are not traveling. I think that's going to make it highly likely that the hotels are going to struggle to fill their room rates and stuff. And in addition to that, you have to question, how is an airline industry going to work if you've got a plane that normally takes 150 passengers and through social distancing the most you can put on it is like 50 passengers. Is that going to mean that you have to pay 3 times the price to get your flight, or is it just going to mean that the planes have to fly at a loss? Clearly the prices of flights are going to shoot up, and so I think it's going to have a big impact. If you've got prices shooting up, then people suddenly start to think, well, I'm not sure about the family holiday, bringing all the kids on an expensive flight. So I think possibly staycations, and so maybe regional hotels and things like that might be something. But I'd be a bit nervous about that whole sector, to be honest. And especially because of the fact that a second lockdown, because of a second wave, that's a big risk, and if you're into that situation, a lot of these hotel chains and stuff could fail over it, So I'm a bit nervous about hospitality, food, gyms, clubs, any of that kind of stuff. Going back to, if you don't have any other questions, Ben, I'm going to go back to I was talking about pipeline. We have noticed price chipping is already taking place, and we have got a deal that we entered into with some sellers a couple of years back. They wanted to sell some land. There was planning permission. We went for planning permission on this. We've been waiting for it. It hasn't arrived yet, and the deal was basically subject to planning. But the whole world has changed now, and we're actually going back to them saying, look, first of all, the investors that we were bringing into this project, these guys are not interested. No problem at all, Ben. So we're already looking at a 30% price chip on the deal, and we've heard that the main I've got these damn birds flying around the garden. The bad bank here in Ireland, it's called NAMA. Those guys are the ones that took over all the bad loans. They have actually agreed to a 30% price chip on a deal that they're selling with a purchaser, and it's all because the guy has cash and he's ready to go. So straight away there's opportunities out there, and so I definitely think you can find opportunities from distressed sellers and from realistic people who accept that the market has changed. You're going to find people who have not yet capitulated. They still have this fantasy price in their mind. Whatever your asset was priced at last, hi Cara, nice of you to join. Anyone who had a price of an asset last December, that price is history. Do not fall into the fantasy of believing that your assets are valued at that any longer. And this is a tough mindset for a lot of people to accept. If you bought it last December, sorry, but you're looking at a big loss on your current value. If you have a deal that you were looking at last December, you're now looking at a significantly lower price, and you should definitely be going back to the negotiating table. Now, a lot of people, and you have to just understand human behavior in this situation. A lot of people, they get offended by this, and they take it as an insult that you're going back asking for any kind of a reduction in price. And they just have to accept that this is the reality. The market is not going to buy. And so if you walk away from the deal, the chances are they'll be taking the 30% cut anyway. And so you just have to say, look, this is the realism, this is how it stands. And it's nothing, it's just business. And you can't justify paying what you thought it was worth in December today. Now, it's not going to make you any friends, but unfortunately that's where it's at. And you're also going to find that if you do buy at that price and you've got to go to the banks, possibly the banks are not going to support you now because they're all looking at price cuts. And also if you've got any kind of investors that back you in your projects, they'll also be giving this a hard look. So don't wait for them to start questioning your purchasing. If you're sitting on cash, if you're lucky enough to be in that position and you're sitting on cash, I would hold fire. You will find that there are prices dropping out there, but it's going to take some time for the market to capitulate generally. And I think the reality is that you're going to find in 6 months to a year's time, people start to realize, oh shit, we better go and adjust our prices before the banks start to force us to do that. And so that's when you're going to start to have adjustments. And I don't think you should be rushing into a deal. Don't fall in love with a deal. That's a big emotional tie that people have. Even if you've done a load of work on it, even if you've gone for planning and all these kind of things, you better be willing to walk away from it, or else work with the seller to find an agreeable price. But definitely the world has changed. For those few people who are sitting in that thing, I have a few things noted here. Let's see. Basically your funding, your banks, all of those. Get in touch and communicate with your investors and your bank. Don't be the one that they're chasing. One of the mistakes I've made in the past is being slow to go back to investors. They are seeing the world collapsing around them and distressed prices and hearing all this kind of negativity. If they are chasing you, it's because they're worried that you're trying to conceal this kind of thing for them. It may not be the case, but it's just human nature they start to get worried and they need you to reassure them. So be on the email to them or be on the phone to them and just give them an update. Tell them what you're doing. Tell them the measures that you're taking. If there's any kind of adjustments, you need to start making them early. You start looking at your sales pipeline. Were you going to start selling at a certain price? If you were, it's time to go and reduce that price. Can your project survive, say, a 10 or 15% price cut across the board? If it can't, then you need to be careful about going deeper into that project. You might need to bring a partner on board to actually make it possible to complete that. You don't want to go deeper and deeper and spend more money and then find that the price is actually reduced around you and you're not able to sell at the price that you thought and you've just dug yourself a deeper hole. So just take the emotion out of it and be very, very level-headed and just say, look, this is a situation. We need to try to stabilize, and that's probably the best advice for now. Looking back at my career, I ended up in a situation with properties all around me falling in value, and I just did not bite the bullet. I refused to accept that my net worth had collapsed to the level that it had so dramatically. And it's kind of, I don't know whether it's a combination of emotion and ego, but you have this idea in your head of the level that you're at, and it's very hard to accept that perhaps you're actually in negative worth now. And that happened to me. I went through a period of talking to the banks about forgiveness and debt forgiveness. I was also talking to the banks about just pushing the button on a bankruptcy. Now, thankfully, I avoided it, and I avoided it because I had income streams coming in that were keeping me supportive, but they also eventually pulled the plug on that, and they did a full rental sweep. So any surplus income you had was just automatically wiped. So just tread carefully, review your whole situation, do a full LTV review of your portfolio, check for your core assets, do an assessment. Do you have any assets that you think are not core to your portfolio, and you wouldn't lose any sleep if you lost them, or if you decided to put them on the market and put them out there for sale? And don't chase the market down. If you chase the market down, you're going to constantly be dropping your price below where you want it to be. You're constantly trying to play catch up. And it's something that I've done before, and it cost me many, many millions of euro, and very painful. And eventually you realize, damn it, I should have just taken that first offer when it came in. And looking back, it always looks better 6 months later than it did at the time. So hope this is helpful. Hope this is useful. Guys, if you haven't already, please hit like on the page. I'm actually creating a group that I'm going to be posting more of these kind of lives to. So the group is behind the facade. You'll probably see it linked to this. So click on the button there to join the group, and also you'll check out my podcast, which I launched, and I'll be putting a couple more episodes up there this week. So until then,